to talk about the future of financial services. You notice we're one short. We have Michael Miebach and Marianne Haahr. Michael is representing us as the Chief Product Officer for Mastercard. And Marianne, we're going to talk about your organization shortly. But of course, Carlos from BBVA wasn't able to make it today, unfortunately, because he's come down with some lurg. We wish him a speedy recovery, but he wasn't able to make it. So we're going to talk about the future of financial services. Obviously, we've got a couple of key themes here. Mastercard is here, and we're going to talk about how payments are changing in the world, and how you guys see that changing, and obviously from a product perspective. And Marianne talking about sustainability and sustainable finance. It's becoming more acute of an issue of late. But Michael, let's kick off with this sort of theme. Obviously, there's been some big moves in the payment space recently. You guys have been doing some acquisitions. There was we were talking this morning about the Plaid acquisition by Visa. So as this sort of landscape is changing, we've got Chinese mobile payments, and you guys with tokenization, and how do you see the core product of Mastercard evolving in this sort of very data, contextual, behavioral-driven environment?
Now you can hear me, actually.
Yes.
So I totally expected you mentioned Plaid in your first question, so there you go. I will not talk about that very specifically right now, but I do love to talk about open banking. Now, the question on how is the core product of Mastercard evolving kind of implies a little bit that it might be about cards, but it isn't really about cards any longer, and it hasn't been for quite some time. So the way I look at this is, if the question comes down to here's a bunch of mobile apps, here's a lot of AI, and here's responsive solutions and contextual stuff, and then there is a card product that is stale and it's been the same thing for 50 years. Fortunately, we are far away from that. So in the end, when you take a step back and you look at the payments landscape, it strikes you, and it struck us 4 years ago, that the minority is actually card-based. So the vast majority is something else. It's largely from one bank account to another, or it's emerging tech like blockchain, et cetera, et cetera. So we said, the way this has to evolve, and we see it in our customers, and this is not a conversation about Mastercard, it's really what we hear from the banks, and there's many of them here in the room, and that's much more what we actually hear from the fintechs, is you gotta have solutions for everybody. And then you come down to the point and say, do we wanna be everything for everybody? No, we don't. We don't wanna be in the business of front-end solutions. So the CX, a fantastic CX that's delivered to a consumer that might be leveraging AI in a financial supermarket is not what we do. But across all of these different types of payments, one thing that is for sure true, and that is it's all trust-based, because it's about money. So one thing that we definitely can do and how we connect everybody is making sure that everything is safe and simple and secure and all that kind of stuff. So I do believe there's a really important role to play for a payment technology company, for a company in commerce. I also feel that common features across the whole ecosystem, like trust, is especially where we can make a difference. And then you go and we leverage the same emerging technologies, all of these mobile players and all these other people at the front end. We just focus on safety, security, on data management, on data analytics, and basically powering the B2B ecosystem that's behind. So that's the journey we've been on. It's the journey that I see the market being on, and it's a lot of people that come to our lounge here, they have conversations with us about exactly that. That's where it's going.
That obviously leads us to sort of the issue of identity. Because you guys, you authenticate identity. Yeah. That's a key element. How do you see that evolving within the Mastercard space? Yeah,
so the first things, when you think about identity, is the person who's paying really the person that he or she's claiming to be. So identity of people, an important one. There's leveraging AI for that, leveraging biometrics. That's clearly a trend where that is going. But a really interesting space is the identity of things.
Yes.
So if you think about 30 billion connected devices, and you start to see, well, what are all these devices? Have they had a security update in the last 5 years? What is going on? And they start to drive payments and order things and all of that. So here's a whole new space where the topic of digital identity needs to actually expand much further. We just launched on people identity in Australia a couple of weeks ago, but identity of things is where things are going.
Yeah, like you might have to pay you tip your drone for dropping off your pizza, or
Exactly,
and I don't know whether you saw recently, but there's some controversy over Grab because there's been these restaurants, phantom restaurants popping up on Grab, fake merchants pretending to be, other restaurants, and so it's quite interesting. There's definitely
We can talk a lot about
Marianne,
that, but let's not.
So you had your hand to jump in there, but first tell us about your organisation. You came out of the UNEP. And you're in sustainable finance, so maybe introduce that and jump into the conversation on identity.
Thank you. So we are the Sustainable Digital Finance Alliance. We were launched at Davos in 2017, co-founded as a public-private partnership between UN Environment Programme, the CEO of that, and Financial Services, but registered in Geneva as a independent non-for-profit. So our big why is looking at the financial system and seeing that it's digitizing faster than any sector in the economy. And that basically opens up the financial system to rethink it, to redesign it. So regulators are redesigning financial service regulation, you're redesigning products, are redesigning capital market instruments. And so our big why is to plug green into that redesign process. And I just wanted to pick up on what you said, Michael, in terms of identity of things, because that is one of the things we also need to move into to unlock more green finance, is intelligent green assets. Because what is one of the big barriers right now to scaling, for instance, green bond as a capital market instrument, is exactly the data side. It's exactly the fact that if you want to issue a green bond today, it's a bureaucratic nightmare. You have to set up a green bond framework. It has to be audited by a third-party auditor. You have to do use of proceeds and proof of impact reporting. But if we can, and that's all done by the NVTL or specialized agencies, but if we can move to a world where we have self-reporting green intelligent assets, and you can do that today, right? You can have a solar cell somewhere in the rooftop on a building in Paris that can do its proof of impact reporting directly to a ledger, so you can invest in basically what you could design as a green bond. So those are some of the things that we're looking at, because when you look at green digital finance, you can basically rethink how we do green finance, both in terms of scale, but also in terms of innovation.
And we can combine a whole bunch of technologies for that. Actually, I'm a big fan of a group called the Sun Exchange. I don't know if you know of
Yes,
them,
in South Africa.
And they're now coming to the Middle East. But these guys launched their photovoltaic cells on the blockchain.
Yeah.
And for every megawatt of energy they produce, you get a token, a crypto token. What would you call a token that is generated off solar energy? So they call theirs the Haahr. I think that's a good name, right? But you can then trade in your Haahr tokens to deploy more solar panels. But it's all driven on blockchain contracts. So a really interesting model. But
and rethinking the concept of value, right? And I think that's what we're seeing more and more of, and we're going to see more. So we work with Ant Financial, not the big Ant Financial, but the part of Ant Financial that's Ant Forest. So basically what that is...
This is not a forest of ants.
No, but similar in a way. But it's basically if you have the Alipay wallet and you download the Ant Forest functionality, you invite AI to look at your behaviors via your mobile wallet. So it looks at 18 behaviors. So basically whether you drive your car or whether you walk to work. And it gives you carbon points automated. And you get green energy points. And when you accumulate a certain amount of green energy points, you plant a virtual tree on your phone. And then they gamify it, so you can steal the energy points of your friends, and they do rankings, so you get the social recognition, so who has the most energy points this month, etc. And then they plant real trees. And so it's 500 million users doing that at the moment, and that's just the first iteration of the platform. You could think about that in ways where you could then use the green energy points as value to exchange for all kinds of other things if they build out the ecosystem. So you certainly start to sort of redefine the concept of what is value into a green reality and really give people the opportunity to be green asset owners.
I just need to jump in here. So here's the Sustainable Digital Alliance. So here's Sustainable Mastercard. Because on that point, so you just talked about you got to track the behavior of assets, but then we just talked about the behavior of people. Imagine what you just said would be at a scale of 2.8 billion people, because there's 2.8 billion people in the world that hold a Mastercard. So we're doing exactly what you're suggesting here. So I sense some good alignments. We basically say you buy something on your card, and there's a link to your carbon footprint, because there's merchant categories. You can tell you, well, if you buy a car, then it's very different than if you buy something in a supermarket. So we launched that in the Nordics. And that asset, we're now taking it to the global product organization, say, how do we do that? So I think there's a role for the corporate entity to start to look for these multiplier effects and partner with more people. We're not in Davos here, but that was a big topic there.
Yes.
And I think leveraging tech and leveraging particularly fintech, oftentimes is going along with a payment, is a good path that we should all focus on across this room.
But I think that is where sort of awareness is coming right now, that the sort of shortcoming of capitalism is it's not incentivized to fix inequality. It's not incentivized to prevent climate damage. Okay, if you can build a company that makes money out of sustainable, finance or sustainable energy systems, then great, capitalism will embrace it. But in the meantime, before we could get to that point, how do you really incentivize organizations to be like this? So there's been a push now, Marianne, in terms of incumbent finance. We saw Roger Federer recently come under attack or come under attention because of his alliance with a local brand and their sponsorship of fossil fuel programs. So, how do you see this sort of sustainability theme now becoming corporatized?
Well, I fully agree with you that that there is movement in the market, and there's, especially from the regulator side, quite a lot of pressure, especially if you're in the European Union. We just got the new taxonomy legislation. We're having new, with MiFID2, introductions of having to also move sustainability advice into the retail. So there's quite a lot of push from the regulator, especially if you're in Europe. And I think what we've seen now is that we have a lot of financial service institutions that are really stepping up and adhering to principles, the principles for responsible banking, putting that into KPIs, etc. We see the Net Zero Asset Owners Alliance. So we have enough principles, and that's one way we see it institutionalized, and financial service institutions adhering to those, and ambitions, so the net zero or the carbon negative, etc. But then when we look at the numbers, it hasn't really moved much, to be honest.
Right.
When you have the highest valued company still being an oil company ahead of Apple, then capital is not shifting, or the desires of regulators is not being followed by sort of desires of the financial markets. So I think we have enough of sort of statements, but we need to put it more clearly into the KPIs of boards and executives. And then I think we have the sustainability approach until now, when it's been corporatized, has been very much still sort of a compliance approach. It hasn't been a product innovation approach. And the green finance, so how to really accelerate it, we need to move it into innovation. So basically we need to move into look at, so currently in the bond market, it's less than 2% that are green bonds. How can you move that into innovation labs of banks, for instance, right? How can you digitize green bonds so they become much more efficient and sort of the default choice? How can you, on the back of that, have follow-on innovation so you can innovate smaller issuances that are cheaper, et cetera, et cetera? So I think we really need to shift it in to an innovation, a digital innovation agenda. So it needs to live in the digital innovation labs, and you need to have a much more open approach. We're currently surveying different markets. We issued a survey on Germany yesterday, and it was quite at 5% of
You
the
were
German.
in Germany yesterday.
Yeah, in Berlin, and 5% of the German fintech community is actually innovating on sustainability. So there seems to be a supply side that is starting to grow, at least. So you need to, if you really want to get it into your innovation agenda, to accelerate it, to really have a much more open approach to work with some of the fintechs that seem to be start to innovate on this agenda.
Yeah, it's quite interesting. When you look at structurally at the economy and the way capital markets are built, commodities trade around the world, 51% of commodities trade is energy.
Yeah.
And so, when you talk about sustainability and these initiatives, I mean, that's a pretty significant shift. You wonder why, some of the most valuable companies in the world are energy companies. But you come back to this sort of grassroots movement, things like the ant forest, the social awareness we're seeing around Greta Thunberg and our children and things like this. Because this is the future of financial services we're talking about. I'm a bit of a sci-fi nut. I guess that's not a surprise, right? But there's an author who wrote a trilogy on colonizing Mars, Kim Stanley Robinson. And it was 3 books. Some of you may be familiar with it. Red Mars, Green Mars, and Blue Mars were the trilogy. It's about colonization of the planet. But he said that you'd have to, if you were going to go to Mars, you'd have to come up with a very different system from capitalism. And he called it eco-poetics. But basically, it was this, people were rewarded. They were seen as wealthy by more net energy they put back into the system than consuming it. So this sort of view of our personal responsibility, how we view our operation in the environment, we all do a bit of travel. So, are we carbon neutral? Are we balancing our airline miles against sort of offsetting that? This personal responsibility, it does come back to sort of the consumption model, right?
It does.
So when it comes to that personal data, the tradability of data, we've seen all the Facebook Cambridge Analytica stuff and things like that. But you're a huge data organization. And you've got all this wealth of data now around how people spend money.
Yeah.
And that could have a sustainable sort of green focus from that data. So, how do you guys think about the sort of consumer behavior element there?
Yeah. Massive topic, huh? So there's the dark side of data, and then there's the bright side of data. We like to be on the bright side of data. And it starts off to say, when you look at what kind of data do you have, and what can you do with it? A very, pretty obvious question is. So the data that we have is transaction data. It basically says, somebody bought something at a given point in time, and the actual detail to what it was, the specific good, is not there, but it's broadly a category. And
but you do have MCC data.
And it's a date, and
Yep.
it's an amount. So when it starts to analyzing that data, and you start to see what is a path to prosperity for an economy, that data is hugely useful. But it tells you by geography, by county, or whatever you have in a particular country, where certain things are working, where it's not. You can link it to jobs, you can link it to education and all that. So there is immense use in aggregated data that you can analyze. And we are one of the largest private sector data warehouses. So what we've just done is we've just announced data.org. It's basically data for good. We have our own AI and our own data analytics resources to make some sense out of that, so that's fantastic. But then let's take a look at the dark side of data just for a moment, because that can also go off the rails. And here the conversation is, if you have irresponsible data analysis, you introduce biases into AI, you do all these things, I think that requires a very principled approach. Because in the end, yes, it's a clean set of data that we anonymize, but in the end, it has to be a principle and a culture that's the catch-all, because we're going to get new data points. Think about something as basic as 3DS 2.0, 100 data points per transaction. What are we going to do with all of that? So what we felt is what is needed in the industry, in the broader world of finance, is some data imperative, data principles. And we're in Europe, we're in the land of regulation, and it's good. In many ways, it's good regulation, because it's said simply in the GDPR, you should own your data. As simple as that. You should benefit from it. You should control it. Now, that lives in a regulation. We said that should be a global principle. Why don't we take it to Hawaii, we take it to Asia, wherever, and that's what we've done, and we're inviting our partners who work with us on data and say, it's those. We will not share it, we will not sell it, but we will comply with that, and that's a good way to deal with the dark side of it. So in the end, it's very useful, and it's a muscle that we have built out. There's not a single transaction that we do that we don't turn into a better transaction because we use data in a clever way.
So you're really talking about creating a culture around use of data. And,
yes.
And when we talk about sustainability, it's a cultural issue, right? And so when you go into boards of large FIs, how are they organizing around sustainable digital finance today? But more importantly, what are you recommending they do culturally within an organization that changes from this consumption to sort of carbon neutral, sustainable, inclusive approaches?
Well, I think the short answer is they're not organizing around sustainable digital finance at the moment. Had meeting with some of the largest Japanese banks, and it was the first time that the chief sustainability officer and the chief digital officer ever were in a meeting together.
Wow.
So I think whether you talk about large corporate banks or whether you talk about central banks, it's two siloed approaches. So you have sustainable finance, which is a compliance agenda, right, and this is a data game. So it's about how much of our credit and loan portfolio, what's the CO2 footprint, and we need to reduce it by 40%. I mean, nobody is in the carbon neutral business in that sense yet. But, and then you have the digital officer, which is the innovation side. And where we really sort of work with financial service institutions is to say, let's get sustainability. Yeah, you have to have the compliance because you have to have the reporting and disclosure. It's regulatory requirement. But let's use digital to accelerate that you get to the reduction in 40%, and that's at the retail level, but that's also innovating new capital market products. So I think currently it's a very, very immature discussion at the level of financial service institutions, but something that's accelerating. And it is really not only a cultural issue, it is a data game at the end of the day, I think, to a large extent. Both in terms of that now we have the data to create new types of relations with retail clients. So you can actually go into rethinking these types of ant forest type models that worked in China. They wouldn't work necessarily in Europe, but a financial service institution could still use some of that thinking in terms of how can you do automated behavioral nudging by using consumption or behavioral data and offer that to your clients. And that could be in a way where you share the data ownership or where the data ownership is more localized because you have to do that in Europe. Or it could be, why not a public sector model? Why couldn't we all have a carbon account that we can spend every month and then our taxation fluctuates according to whether we reduce our carbon emissions as an individual or whether it increases. And we need Fintech to be able to do that individual carbon accounting. But that's an idea that's out there, and I think now with the new European Commission, head of the European Commission, Leuven, that could be somewhere that we could have an actual serious discussion about now. So I think culturally, it's not only culture, it's also about data and how we use data to innovate new green digital finance products, because we can also use it to build new green types of asset classes. So what Miebach is doing in China, for instance, is that they are the biggest SME lender in the country. So it takes you 3 minutes to apply, it takes you 1 second to get the loan and the verification. And what they're starting to do now is to integrate green scoring into SME lending. And that's automated green scoring. So if we arrive at, and that's down to like the woman selling coffee in the street, is she using plastic cups or paper cups, and she'll get green scoring in terms of how her behavior changes. And the cost of capital will then depend on how she performs. And that's a massive amount of SMEs. And just think about how many SMEs there are in the world. That's the largest employer. So if we can get green scoring into these SME loans in many other markets, then we can really start to package entirely new asset classes.
I think that there's a point to be made here. So it's a data game, it's a product game, it's a tech game. It's not a game at all, actually. It's very serious. So when you think about the various participants in the financial services sectors, you have traditional FIs, you have fintechs, you have neobanks, you have all variants out there. So in the end, if the whole sector needs to move on this or other topics of sustainable growth, financial inclusion, there'd be a whole range that make a more sustainable world, and if the world thrives, then business will thrive, so that all makes a lot of sense. You got to have everybody pull along. So the question is, how do you do that? Because a traditional FI is up against very different challenges than the fintech that comes up with an SME lending solution. So I think there's a role that somebody needs to play, that networks can play, for example, not self-advocating, but basically you need to pull people together. If you're really good, your comparative advantage is I'm an agile small fintech and I can come up with this kind of a solution. But I need a path to scale, and I need 5 banks in a particular part of the continent. Somebody's got to be there in the middle to connect those. And that is how you can think about open banking. That's how you can think about real-time payments. They're all data rails in the end that will enable that. And back to the point about data principles, if all of that is governed within common understanding of shared incentives and a culture on how you treat the data that you're passing through, then I think we have a real chance to step up. So that's at least how we look at the world. And I can say, I go to this fintech and say, you have this great idea, API-based, we're going to plug it into this bank in country XYZ because the government there is a great partner and we're going to make a real difference.
Can you see, recently I've been using TripIt to sort of manage my travel, and they have a total carbon footprint score for each flights now. Could you see yourself doing something like that at a transaction level?
Yes. I can. So this is not rehearsed. So I've never heard about, what was it called?
TripIt.
TripIt, okay, so there you go. We're doing exactly that. So our corporate card programs, so basically, if most of you would probably be traveling to Paris on a corporate card. Imagine if there's a tracking on your travel, the link to your carbon footprint, and basically your employer will buy the certificate to basically offload the offset.
Yeah.
This is exactly what we're doing. We just launched that a couple of weeks ago. Makes total sense. And in our case, it would be pretty global.
Because consumers seem to be demanding more transparency on this issue. So you guys are in quite a unique position, with the exception of maybe Amazon or AWS. Your network is sort of the glue between merchants, banks, and fintechs now. So, this could be a clear data driver, and consumers.
And the network, you did talk about Plaid and Visa right at the very first second of the interview. So if you think about where the network has gone, it used to be about card transaction, then it was about bank accounts, and now it's for data, it's for anything. And in the end, we can put anything through the network, anything that drives value.
Yes. Marianne?
And I think that's the type of thinking in terms of how do we use fintech to incentivize green behaviors, but those behaviors both at the corporate level but also at the individual level, like we've talked about. So right now, the green finance space is still quite young. I mean, the first green bond was issued in 2007, and we haven't seen that many green digital finance innovations coming out that's really scaled like the green bond, and we need more instruments. That's why we need green finance to move into digital innovation. So we need these types of transition bonds, for instance, where you don't necessarily commit to using all the proceeds for only green, but actually tie to how you will shift your business and transition it, and the cost of capital then depending on how well you perform on these criteria. That's what we see ING, for instance, and Rabobank doing in the Netherlands, these sustainability-linked lending products, but that needs to move also to transition bonds, because we have the data now, and we can actually do it. And we have a lot of industries, since we have more industries that needs to transition actually from gray or brown to green. So we need to leverage the data of fintech to design these types and harvest this data to really incentivize behaviors also at capital market level.
So this is sort of, we've got a couple of minutes to wrap up here, but let's just drill down on that. we've got an audience here that includes fintechs and banks. And your major metric is getting these guys to put an action plan in place and do something tactical. And of course, at Davos last week, we have Greta Thunberg, getting into this as well. But to create that action, that momentum, what do you see both your organizations doing? How do you create that sort of action plan?
So we talked about various aspects of sustainability in a future of finance panel, which is already a good starting point. So more dialogue like that is certainly needed. We just launched this coalition around, Priceless Planet, it's called. It's basically about responsible forestation of the world. And we pull in fintechs, we pull in banks, we pull in merchants, we pull in everybody. And really, it's the reach of all of those billions of end consumers. If they were to individually change their behavior, that makes a huge difference. So open invitation that this isn't just some announcement at some meeting in Switzerland, but it's something much bigger. So that would be number one. Then I want to come back to the data piece. All of this is in the end. Everything we just discussed will not work without proper use of data. We put out a data responsibility imperative. You own it, you control it, you benefit, we protect. And we're looking for everybody in our industry to partner and make that work, because that's going to be the enabler for everything else we just talked about. 2 asks.
Good. Marianne, we've got a minute left, so how do we join the alliance, and how do we become more active in this sustainable future of finance?
Well, I think there are 3 things you can do as a financial service institution at the intersection of fintech. Is that you can look at your existing portfolio of sustainable and green financial products, and how do I digitize them to become much more efficient so they will be the default choice. How do I then do a set of proof of concepts of those that we've just talked about that are more market ready? So how can I do a fully automated bond in the market? So that would be the next, doing proof of concepts on green digital finance. That's the next. And then really start to move your green product development into your digital innovation lab.
And tying this into actually incentivizing fintechs and FIs generally to have this as a key KPI. And maybe the market has to hold their feet to the...
If Carlos would have been here, he would be nodding now.
Absolutely. Yeah. Anyway, well, thank you both for your time today. And the future of finance is bright and sustainable, but we have some work to do, right?
Excellent. Thank you, Brad.
Thank you.
Thank you, everybody.